What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about one of the proposed IPOs in China. In other words, it is a company based out of China that is going to go public in the United States. It is going to be a pretty significant IPO worth almost $100 billion. And that's exactly why I wanted to do this video and go over whether this company indeed has a lot of potential moving forward as well. I'll kind of highlight some of the strengths, weaknesses, concerns, competition, valuation. Everything is going to be discussed in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only content, including private videos, Excel spreadsheets. You can access all the watch lists, the buy and sell alerts through Discord. And again, the first week, second week of the month is the best time to join. So link's going to be down below. And also do check out the educational courses, fundamentals, technicals, options, and psychology. This is lifetime access and all content, new content will be added for free. You get access to over 130 plus lectures and 30 plus hours of content. And I've literally spent hours and even months putting these together. And also do connect with me on Instagram. My handle is going to be CASWRP. I do post a lot of interesting stories, behind the scenes stuff, portfolio updates, profit and losses. Everything's going to be over there as well. So link's going to be down below. So company that we are talking about today is called Shine or Shane. I'm really sorry. I've always struggled in the pronunciation of this company, but it is a Chinese manufacturer, retailer of fashion and trending sort of accessories and clothing. And it's actually a very, very popular brand. I've heard of this company before several times, and I'm pretty sure it's called Shein, but we're gonna go with the Shein in this video. It is a global fashion and lifestyle e-retailer committed to making beauty and fashion accessible to all. And they use on-demand manufacturing technology to connect suppliers to our agile supply chain, reducing inventory waste and enabling us to deliver a variety of affordable products to customers around the world. From our global offices, we reach customers in more than 150 countries as well. So founded in China in 2012, Shine is swiftly become a popular destination for affordable fashion. So affordability and price is very, very important to the company because they're a cost leader. And the company expanded its manufacturing to Brazil and Turkey and its distribution to the US, Europe, and Canada as well. And they've introduced over 10,000 new products daily and has extended its product range beyond fashion to include items such as kitchen appliances, electronics, car parts, and other stuff, other accessories and other items as well. So over 10,000 employees worldwide, over 58% total female employees worldwide, selling to over 150 countries in the world. And I'm sure you may have heard or seen their logo or have really kind of, it may have come across in conversations when it comes to fashion and e-commerce and retailers, because it's a pretty big retailer in China. They've been around for over 10, 11 years. And more recently, they've been able to scale revenues to over 20, almost $30 billion. So Chinese fashion giant company to go public in the US. So Shane has submitted documentation for an IPO on the US stock market as per the reports, and the IPO is anticipated to take place in 2024 sometime next year. And the details of the lead underwriters for the offering are expected to be Goldman Sachs, JP Morgan, and Morgan Stanley. And Bloomberg News did suggest that the Shine's valuation in the US initial stock sale could reach as high as $90 billion, and this valuation would make Shine approximately 3 times more valuable than the retail giant H&M, whose market cap is around $27 billion. And if Shine actually does achieve this IPO target valuation approximately $90 billion, it would surpass a $68 billion valuation of the Chinese ride-hailing company Didi during its debut launch in 2021. And this would make Shine's listing the largest by a Chinese-founded company in the US, surpassing Didi's valuation, which has since been delisted from the NYSE due to Beijing's tech crackdown as well. So it's a pretty big deal. If this company actually does go public at almost a $90 billion valuation, it would be the biggest Chinese company listed over in the US from its IPO perspective, right? Of course, Alibaba and JD.com and Tencent are definitely worth a lot more from a market cap standpoint, but this would be the biggest IPO from China being listed after Didi, of course, which has been listed because of the tech crackdown. Now, there are some concerns, which we highlighted. Some of them are the mysterious CEO, right? So the CEO doesn't give out any interviews or public statements about the company. And this approach definitely is in stark contrast to other publicly traded firms in the US where CEOs commonly engage with the public and the media. In October, Shine did not provide any information to CNBC regarding whether the CEO Zhu is still a Chinese citizen. This lack of clarity about the CEO citizenship status as to the overall mystery surrounding the leadership of Shine. But I feel like this is just lessons learned from everything that's happened in China with respect to tech crackdowns. And of course, a lot of CEOs being very vocal, like for example, Alibaba, Jack Ma was very vocal about Alibaba and of course the Chinese government and their policies, and as a result we know what happened with Alibaba and other tech companies eventually, which led to Jack Ma disappearing for quite a few months, and then of course the net worth of his net worth, of course, as part of Alibaba and the Ant IPO, it was a complete mess, which resulted in the stock prices selling off aggressively. They still have yet to recover. So that could be one of the reasons why there is some level of mysteriousness with respect to the CEO and why he or she is not openly publicly giving out statements or giving out press releases or giving out interviews, because the less you say, the better it's going to be, because you never know what could tick off the Chinese regulators and the government to go after the company and do these crackdowns, right? So I think that could be one of the reasons, which certainly is a bit of a concern, but at the same time, it's I'm assuming it's for the better of the companies and the IPO and everything else that's going on for the company. So acquisitions of sourcing cotton from Xinjiang. So Shine has faced acquisitions of sourcing cotton from Xinjiang, China, where the U.S. has banned the import of products due to evidence of human rights abuses against the other ethnic groups. And as of November 2023, only 1.7% of Shine's cotton tested positive for unapproved cotton, a significant lower figure compared to the industry average of 14%. So this is both a little bit of a concern, but also a good thing that it's only less than 2% that is tested for unapproved cotton versus 14%, which is the industry average. And in cases where unapproved cotton is detected, Shine takes prompt action, including suspending production, halting shipments to the United States, and removing U.S. product listings as well if it's actually found that they're sourcing cotton from unapproved places. Now, when it comes to data security, there are concerns among Americans about Shine's potential alignment with Chinese government and the fear that data about Shine's American customers could be accessed by Chinese authorities. So we kind of go back to that discussion with TikTok and a lot of these other companies that are in China that are collecting data on U.S. audience that could further be used to there's concerns apparently that it's going to be manipulated in a way that's going to put some hindrance on U.S. audience and U.S. customers. So that again is a little bit of concern with data security. In response to these concerns, a Shine spokesperson has stated that the company stores U.S. data within Microsoft and Amazon's cloud services, specifically in data centers and regions located within the United States as well. This is exactly what TikTok has also mentioned to regulators over in the U.S., which have also had concern about data security and data safety for U.S. audience and U.S. customers as well. The company also faces criticism for things such as allegedly poor working conditions in factories, alleged copyright infringement on independent artists and designers, overproduction of poor quality garments, along with criticism of fast fashion impact on the environment. Now, this right here are some of the risks that I wanted to highlight, which are going to be persistent with almost every brand out there, every single sort of fast fashion brand, whether it's Zara, whether it's H&M, whether it's a lot of other brands that are like selling clothing products. Are going to deal with a lot of these IP infringement clauses, poor working conditions, because they want to have higher margins. And as a result, there's always going to be some criticism around these areas. These are not like huge risk factors, but yes, something that we need to be aware of for any company that's in the clothing, in the brand, in the fashion accessory sector. Now, going over to the numbers of deliveries, dominance, revenue, valuation. So 150 million online customer base, which is definitely very, very strong. 113 is the number of countries where Shine has identified as top search brand last year, as reported by money.co.uk. $66 billion Shine's latest valuation, representing a third decrease from the previous year's $100 billion valuation. And 31 million Instagram followers, earning the title of the most popular fashion brand in 2022, according to the Time magazine. And Shine constituted approximately 50% of total sales among major fast fashion companies in the US in November of previous year, as per Bloomberg data. And in comparison, the next leading company is H&M, held a 16% share, and Zara trailed at 13%, and the company operates in more than 150 countries, with the US identified as its largest market, as reported by Wall Street Journal as well. Now, because their products and services are actually a little bit cheaper than compared to their Zara and H&M counterparts, there's definitely a lot of demand from a female audience over in the US, because not only is the quality good, but the prices are also really low. So you'll find a lot of reviews and a lot of product reviews and videos and on TikToks for Shine, right? So there's a lot of marketing and promotion that's happening for this business. Now, in terms of revenue, 2019, $3.5 billion to now $32 billion. So they have literally 10x'd revenues in 4 years. 10x revenue in 4 years is not a small feat. It is a very significant number. And as reported by the Wall Street Journal, Shine generated $23 billion in revenue and achieved a net income of $800 million in 2022. So if you really do the math of $66 billion, so if you do 66 divided by 0.0800, it's trading at about 82 times earnings multiple, considering the current valuation, because if their net income is $800 million and the valuation, the proposed valuation is $66 billion, then of course 82 times earnings multiple is certainly really, really high at the moment, which of course makes the company, in my opinion, a little bit more expensive, very overvalued and very expensive. And I would be interested in, closer to, I want to say like 20, maybe $25 billion valuation would be a lot better for me personally. For the first 9 months of 2023, Shine's revenue has surged to nearly $24 billion, marking a substantial 40% increase. And this surpasses the revenue figures of major competitors with H&M and $16.4 billion and Zara owner Inditex at $18.3 billion. Just think about the size and scale of this company in the fashion industry. $24 billion, which is more than H&M and Zara, which have been long-standing brands and have been around for a very long time. And Shine has also been expressing interest in a US IPO for at least 3 years. However, the company has faced challenges, including geopolitical tensions between Beijing and Washington, which have reportedly impeded its earlier attempts to go public in the United States. And that could explain why the CEO is also not very expressive or out there kind of pitching its company because of anything that may go wrong in its IPO moving forward. And finally, if you take a look at some of the performance from these fast fashion brands, including leaders H&M, Zara, and Uniqlo, and of course have demonstrated underperformance compared to the S&P 500 over the past decade. So S&P 500 has outperformed some of these companies. In contrast, certain apparel stocks such as Nike and Lululemon have consistently outperformed the market, and notably these successful companies operate in the sportswear or athleisure subsectors where product performance plays a more critical role in consumer preferences and market success as well. And that's actually one of the things that I feel like when it comes to fashion brands, they are more sort of cyclical in a way that they're more trending, and whatever's trending is going to work. Whereas something like a Nike or a Lululemon, athleisure and fitness products are going to be in fashion, in trend forever, right? Sneakers, yes, there's going to be some certain sneakers are going to be trending versus not. Certain athleisure wear is going to be trending versus not. But at the end of the day, it's still the same stuff. But when it comes to other fashion brands like Zara, H&M, even Shine to some extent, they have to continue to experiment new stuff, new products and new things that are actually going to be more appealing to the audience, to the customers to try out. So in my opinion, I think that has a little bit more cyclicality versus something like a Nike or Lululemon. But the revenue has absolutely exploded, and it seems to be a very nice, profitable company. Again, next year we're going to find out what that valuation ends up looking like. I would be a lot more interested in closer to $25 billion, considering $800 million net income as of 2022. But we do also not know the balance sheet and how it's structured in terms of debt, equity, and cash. So those are some things that I would also need to know about the business moving forward. But when it comes to competition, of course, we got H&M, we got Zara, we got Amazon, and of course, we've got Pinduoduo as another Chinese e-commerce giant, which has heavily promoted its sister platform, Temu, abroad in the US. The holding company has a market cap of more than $180 billion on the NASDAQ as well. So according to a report by money.co.uk, China surpassed giants like Nike and Adidas in being the most Googled clothing brand. Additionally, it has outperformed Zara and Macy's in terms of online sales as well. So this company definitely has a lot of potential, and I just want to put this on your radar because it is a company that has higher revenues compared to Zara, H&M, most searched Google brand, most Instagram followers. It definitely has a lot of sort of hype and a lot of trending content around what they can offer. And next year, if and when they actually do go public, I think it's going to be a very interesting company and a stock to look into for potential opportunities. So I hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Definitely do check out our Instagram, CastWRP. You get access to all the interesting content. Again, fundamental tech analysis courses along with options and psychology. And also join our Patreon and our Discord with a link down below. 40 plus private videos and lectures that you can access. Excel spreadsheets, including fair values and intrinsic values. And of course, Discord channels with trade alerts and trade ideas also included as well. As always, happy investing. I'll see you all in the next video.